7 o'clock, so we'll go ahead and call to order our meeting. And the first thing that I'll do is see if there is a request to remove any items from the consent agenda for discussion.
Nothing for me, thanks.
Okay, Joy?
Yes.
And what is that?
Two things actually. The Shred Corporation, I know we were just kind of talking about that, but I had questions about that. And then
the check, is it page?
Yes,
Okay.
the $900. And then the analytics, number 2276.
AUNA?
Yes.
Okay, so page 7A, or item 7A, page is that page 12, and then we'll talk about it under the discussion.
Page 12. Thank you. Joan?
Okay, 7C, which is page 23. Question about the water.
Thank you. Nothing, okay. Okay, thank you very much. Well, I just want to welcome everybody to, I'm sorry, you're right. I do have to call for a motion to approve the order of items for the remaining items.
So moved.
Second.
All in favor?
Aye.
Great, okay. Now I would like to welcome everybody to 2023, and what a wonderful year we have ahead of us here. We have our strategic plan kicked off, and behind us now the planning process, and so it'll be very exciting for us to move forward with that and see a lot of new exciting things coming to our library. We have, like we were just discussing, this flamenco dance program. We have our chamber music concerts coming up. So there are a lot of really exciting programs planned, and my calendar is filling up. So I'm excited to see you all there and to experience some of that together. And I'm going to turn it over to Tara for the director's report.
Thank you. Well, yes, Happy New Year, everyone. Like Danny said, I'm really excited to have a leadership team in place, a board stable, and a new strategic plan freshly minted by this group. And next week, the MAC group will meet to establish a framework and decide on our priorities, so we're excited to move forward with that. The Eagle, our newspaper that covers our area, was reporting on the 2023 goals of different municipalities nearby. And one of them really spoke to me. I really loved this. It was a neighboring community's village president said, "My goal is to take the time to assure we get the boring things right."
Oh, I like that.
He said they have a lot of big things that they're working toward, but they're also focusing on making sure they have the policies, procedures, and planning in place that will help the village be the best for its residents.
That's a nice quote. What village is this?
Beverly Hills.
Oh, those Beverly Hill lights are so.
I think you mentioned that actually in the planning process, didn't you, Tara?
I think I did.
For the library?
Yeah.
I seem to remember that.
Yeah, I mean, especially when we talked about one of the strategic directions, which is internal focus, or I can't remember what it is, but that's kind of the crux of that, is making sure that our policies, the way that we work together is sound, and that we're reviewing them and making sure that they're.
It's like the things behind the walls you can't see, and people are like, "Oh God, to spend money on that," because you can't see it, but perfect.
The basics.
Yeah.
So I heard you all talking about the shredding event. That's this weekend, this Saturday from 10 to 1. So if you've been doing any cleaning over the holiday break and you got some boxes of paper to shred, you can bring it up here. Up to 4 boxes of paper to be shredded, and Shred Corp is the company that we've hired to do this. When you arrive, you'll be directed where to go. We're putting that over in the southwest corner of the parking lot. So hope to see you there for that. We have talked a lot about intellectual freedom in our board meetings and with our ambassador group, and so upholding that value is sure to still be a hot topic in 2023. The Michigan Library Association and the American Library Association are following this very closely. Do you all receive the Michigan Library Association's news and announcements? So you see that there are many articles about Michigan and the country and challenges to intellectual freedom. So we'll continue to follow this and educate ourselves and prepare for any challenges that might come our way. The MLA is hosting an advocacy hour this week, Thursday at 10 a.m. It's an online Zoom presentation. And they'll be speaking to two people from the ALA on the right to read. So if anyone's interested in that, I can send you more information. Speaking of boring things, the library will be releasing an RFP for cleaning services.
I think that's exciting.
It's very
Very
important.
Very
essential.
That's right.
That will be released on Monday, February 6th. We'll be emailing that RFP to some companies, and it'll also be available on our website for anybody who might happen across it. And Catherine will be working with Hugo to review our cleaning services.
How often do we review that? Is it every other year?
Every 3 years.
Every 2, isn't it 3 years?
I know. So we will be making a recommendation to you at the April regular board meeting on that. The ambassadors group is meeting next week on Tuesday, a week from tonight. So excited to present the strategic plan to them because they haven't seen it yet. Last time we talked to them was October. And then I just wanted to share a couple of things. We have a plaque in the middle of the table to honor our star library status. So I wanted to share that with you all. And I just have a little show and tell. This is in case you read about this in the newsletter, the produce bag that Adult Services had as a take and make kit.
Oh, that's
Oh,
great.
that's what it was. Oh, it looks great.
Yeah. I did not make it. Shayna Connolly made it. This is the sample.
Is that lined
crochet?
that would be a beautiful
It is,
purse.
Yeah.
You could line that with some great fabric. Wow. I mean, I couldn't, but you could.
No, I couldn't either. And that's all I have for my report.
Great, thank you so much. Okay, so we need a motion to approve the remaining consent agenda items.
So moved.
I'll second it again.
You're a second man.
All in favor?
Aye.
Thank you. Okay, and now it is time for our call to the public. And we have a few visitors.
Do you want me to go first?
Yeah, go ahead.
So I am here as a representative of the Staff Organization Committee, just to check in and say hi. We have a fun event coming up to celebrate our star library status. We're gonna be having a star-themed hot beverage and pastry day for the staff on January 26th.
Nice.
So if you find yourself in the building, let's circle that day on the calendar.
Was it February 26th, you said?
January 26th.
January.
So soon.
Yes.
We thought it would be a little chillier by now and it would be more
Yes,
appropriate,
Right.
but we think it'll be fun and seasonal regardless. Additionally, the SOC is working on finalizing its slate of nominations. I am coming to the end of my tenure on the SOC, but that means you'll get another fabulous person to come to the meetings, and those will be voted on at the all-staff meeting in February.
And is it just you that's rotating off?
This time around, yes.
Right.
Both Amanda and Deb have agreed to stay on. You know, we've kind of moved to a couple people staying and couple people leaving, just so there's a little bit of continuity, especially with how fractured things got over the pandemic. It was really difficult.
But Amanda and Deb are filling partial terms.
Partial
right?
terms, so it's not really, I don't know, it was a long year.
Well, thank
But it was a good year on SOC.
Yeah, that party was amazing.
Oh, yes,
Holiday
yes,
party. Thank you.
kudos.
Yeah.
That was really fun.
Yep. Thank you so much.
For sure.
And is there anybody else visiting that wants to speak or share with us?
I'm just listening as a resident of Bloomfield Hills, and I wanted to get more involved in the library.
Great,
Yeah,
welcome.
thank you. Glad you're here.
Yes, thank you. Okay, and I don't believe we have any unfinished business, so we will move on to new business and discuss our fines and fees.
Yes. Fines and fees. All right.
And this is page 29, anybody wants to follow along on the packet.
Okay, thank you. All right,
Bless
you. So each year, this is part of our budget process, is deciding on our fines and fees schedule for the coming year. It starts with the department heads and administration, having a thorough discussion of our fines and fees schedule. And our fines and fees schedule is a very detailed document that lists all the things that we charge people for. So fines for overdue items, replacement costs, meeting room charges, photocopy fees, and the like. So in your packet, there is a memo that detailed the changes we're proposing for this year. They're not groundbreaking. And you have both the current schedule of fines and fees, the 22-23 one, and then the 23-24 proposed schedule. I want to note that a couple of times we have talked about going fines free, as is the trend in public libraries these days. We decided to not propose that for this coming fiscal year, but staff are very interested in studying this topic, so we'll be analyzing it, how it will impact our budget, how we're going to implement it, what our parameters will be, and presenting that to you probably for the 24-25 fiscal year.
Aren't we concerned that people will not return things or feel less motivated to return items to the library if there isn't a fee?
Well, they will still be charged a fee if they don't ever return it, so they'll still be billed for the item. And we'll research what other libraries,
Okay.
what their experience has been, and make a case.
I think that's part of the
Okay,
investigation.
Okay.
You know, this is
Got it.
something definitely to be considered.
And
Okay.
yet, I think it's interesting because I believe it was through ALA or PLA did some sort of a report on this for the last few years since it was becoming kind of popular, and they said that in actuality, people were a little more motivated to return things because they felt like there was a bit of amnesty, I think, involved, and that people were very responsible, and it didn't deter people, it actually encouraged people to
Okay.
return.
Interesting.
That's
I'm
interesting.
very
It's-
curious to find out what comes out of some of
I
this
am as well.
research and
Yeah.
I mean, there's obviously money involved and,
Mhm.
you know, that's a huge consideration as well, but
Because we still have that collection company,
We do, yeah.
and they get what percentage of the,
So in, hang on, let me get to this part.
yeah, we just.
sorry,
No, that's
I read
okay.
this.
Yes, it was
that's
in
what I
this
thought.
memo.
I saw it.
So,
That's huge.
yeah, the amount of money that they've collected from November of 2021 to December of 2022 was just over $10,000 in overdue fines. They also got 114 items back, totaling over $4,000. So $14,000 was recovered by that collection agency.
And that's just 1 year, because the first year we had, what, like 70,000 or something, it was amazing.
It's very
It was
effective,
huge,
yeah.
But they get what
But
percentage?
that's what I was just gonna mention.
Well, we paid
Did I miss
them
that?
$2,900.
Okay,
So I don't know what the percentage.
I don't
it's like 30% or
That's-
something, or
okay.
less.
It's usually a return on investment of 4 to 1. But I didn't look that up this year, but in the past, that's what it typically has been.
Each month, when I see that dollar amount,
yeah.
I like, oh, that's really good, and I don't want it to go away.
Right. And they're not aggressive about it, you know, you hear horrible stories about debt collectors calling, they're not aggressive in that sense, so. And we purposely told them not to be, so.
That's their brand. They
Oh,
work,
gotcha,
I think they work exclusively with libraries.
Okay.
And so that's their approach.
Okay.
Yeah.
So no broken legs, right?
No broken
Right.
legs, don't show up at your house.
Or the Jerry Seinfeld, 30 years later, you owe $1 million for them for Dubai.
And the other thing that bothers me is not getting back
Item.
books that are out
Materials.
of print,
Yeah.
Yeah.
perhaps, that we could
Especially.
not replace,
Right, yes.
so.
Yes, that continues to be a really good thing.
Mhm.
Well, let me just point out the changes that we're proposing. Pages 1 through 4, no changes recommended. Page 5 has some changes to our streaming services, and these are mostly just to update it to reflect the current way that those streaming services are structured. So Overdrive, the brand will remain, but the Overdrive app is going to go away at the end of April. So if any of you use Overdrive, you've got to migrate over to Libby, which is an app that was revealed, I don't know, some 6-7 years ago.
6 or 7
Yeah.
at least.
Long time ago.
I
Libby
think
has
it's,
a better selection of books than, because I have both apps, I think.
Oh, or you're thinking of Hoopla.
Oh, Hoopla, you're right,
Yeah.
you're right, okay.
it's just a different interface for Overdrive, so it's the same selection, but Libby is much easier to use,
Okay,
I think.
so it's
And Laura
Libby
and I
and
go
Hoopla.
toe-to-toe.
Yeah.
I got it.
Yeah,
Once
I've
I
got both on
learned-
mine too.
Yeah, once I learned Overdrive, which took a while, I didn't want to switch to
I
Libby.
know.
You can come to the desk and see it.
I will. I will.
So we just removed Overdrive from that column because it will be referred to as Libby from now on. And then the other two changes were to add 2 different borrowing models that both Hoopla and Canopy are already have instituted. Page 6, 7, 8, 9, no changes. On page 10, we just thought we would throw in there that items will be held for 8 days for regular items, 10 days for Melcat items. We just thought that was a good place to put that there. And then we thought it would be good to increase checkouts to non-residents from 10, a limit of 10 to 15. It's kind of funny because this was actually in the previous, the 22-23 fines and fees schedule, but none of us remember how it got in there because we never really talked about it. So we thought you
What
had
was in there, moving it back down to
15.
10? Oh, 15.
So even though I had been approved, we hadn't discussed it, so I thought I'd bring it to you all for discussion here. Currently, at some point I remember reading that when we were trying to right size our non-resident circulation, 15% was the threshold that was trying to be achieved. And we've been consistently way under that.
What does that mean?
7%. 15% of our circulation.
Yes, is used by non-residents.
Right.
But what do you mean that there's a threshold, and what happens if a threshold is met?
So most libraries try to reserve their items for their residents, and so they'll come up with this ratio or metric of trying to make sure it's in that ratio. 15% was the one that was come up with. This was in like 2007, 2008.
Is 15 pretty, are you saying that that's the standard number?
I don't know if it's a standard
yeah.
It
number.
wasn't
Are you
standard,
referring to the
we had it
number of
higher
items?
before.
Or the number of
Number of-
items that can be checked out versus total circulation?
The 15% of the total circulation of the library.
I mean, it was during, it really came to light during the financial crisis.
Uh-huh.
And we felt we
Had to.
had to, keep our,
Because it was we had a
Resources.
much higher percentage of
Right.
people.
It was like 30%
It was
at that
30,
time.
yeah. And so we trickled it down. It wasn't an immediate boom, but it
Sure.
was trickled down that way so that our residents who pay the taxes for this library would have, particularly because of book clubs getting, a lot of the books were going, a book club would have an author and those books would go immediately and they weren't necessarily going to residents.
Sure. That makes sense.
Yeah.
And so the 7% is what we've seen for a while?
Yes. So we felt that adding another 5 items would not drastically impact that. We wouldn't promote this, it would just be something, a nice surprise when people came up to the desk. So there's that change, and then we just made a bunch of edits for punctuation, spacing, typos. Seems like every year we do that, and then the next year we find more. We just talked about the collection agency. We're not recommending any changes to the circulation and use policy. We are not recommending any changes to the meeting room rentals. I included some statistics about how usage of those is still very low compared to what it used to be before the pandemic. but we wanna continue to be a really affordable option for people to meet. And then we're not recommending any changes to our overdue fines at this time either. So that's a quick summary of all the changes being recommended. Any other comments or questions on that?
Do we still have the space in the township newsletter? Do we still get the, you know how we used to have like a column or something? Cause I'm wondering if we could mention in there that we
Print?
have. Yeah,
I don't even know if they have a print
I don't-
newsletter.
I don't think they do,
I
but they
don't-
do online now, so I do read it online.
No, the township, I think, does have a print. newsletter.
I don't remember getting that. But I'm just wondering if that might be someplace that we could mention that we do have rooms available for rental use.
Yeah.
Because, you know, people, the more you show it, the more people might be apt to see
That's
it.
true, I see Catherine making a note right
Oh.
now.
They do have
Okay.
there is a print,
Yeah,
yes.
as I get it,
I
it's
recall
it's-
reading it.
Oh,
Okay.
yes,
Oh,
yes.
is that the blue one that
That
comes in
glossy
blue?
It
Yeah,
unfolds.
Yeah,
Great.
okay, then I have seen that one.
That's how you
Does it
know
come
when
up?
the household.
Yes,
Quarterly.
it must be
Collection.
quarterly,
Yes.
because
Okay.
Yeah.
I can't remember.
But we
seeing
used
it
to
for a while.
have the pleasure of having at least a column in there
Okay,
of some sort, so maybe that's something just to bring it up, you know.
but we
There's
can
also their
definitely put it in their
website,
e-newsletter.
Too, that I think
I
Yeah.
haven't
people
seen
go
a
to.
column for the library there.
We work
I haven't
with
in a
their
while,
email.
yeah.
I think in my tenure here, I never
Where-
submitted anything for it.
Okay.
Yeah, they
They
pick
do
up
that,
our
but
press
there's no
releases.
column there.
Right.
I didn't do my job. But they pick up, anytime we put out a press release, they usually pick it up for the e-newsletter.
Oh, that's good, yeah. So it just gets it out there, cause you know, that is revenue.
Mhm.
And it's nice to see those rooms being used, so.
Yeah, yeah. Yeah, I thought that would make a good little marketing campaign.
And nice to just let the community know that
Sure,
this is
yeah.
available.
absolutely.
If there are no other questions, then we do have a motion. And Joy, would you read that?
I have it right here if you want.
Oh.
There you go.
I move to approve the fiscal year 2023-2024 schedule of fines and fees as presented with implementation to begin on April 1st, 2023.
Thank you. Is there a second?
I'll second it.
Right.
You did.
Thank you.
All in favor?
Aye.
Great, thank you very much.
Thank you. Thank you, thank you.
Okay, all right, now we will move on to discuss the items that were removed from the consent agenda. And we can start on page 12. That's 7A. Joy, you wanted to bring up a couple of things there?
Yes. I don't know if it's, oh yes, here it is. Check 22762 to Shred Corp. We talked about the shredding event that was happening. My question before we started the conversation about it was, what makes this different from, doesn't the township also offer a shredding event? So is this somewhat redundant or?
They do. Theirs is usually in the fall and the spring, so we thought we'd do one in the winter and we might do another one in the summer, so we're kind of complementing theirs and giving folks another chance to.
So another opportunity within the township to do. Thank you.
I have not attended any that the township does.
I have not either.
The lines
I
are
have.
very long.
That's what I was
Very
gonna
long.
say.
Either
I have
direction.
seen them in other places, so I wondered if by offering this, we might be able to offset some of that.
But it's very well organized. They have the fire and police and whatever, I guess everyone who works there. So it's well organized. But you do have to show your ID
To show your
at
township
the
residents.
township, but I don't know if we're gonna have that.
I don't think we're gonna do that
Okay,
here.
so then it could be anyone at that point.
And is Shred Corp the same organization?
I don't know, I don't think
I
so.
think it is. That's over at the township?
Yeah,
Yeah.
I'm not sure.
Maybe I've seen them. I've seen the
I don't
name.
think so, but
No?
this was the one that when we researched it, it's one of my librarians who did it, that was available and the price was reasonable.
Great.
And they, could come and do it, so.
Thank you. Do you feel like we need to have a lot more additional personnel?
Hands on deck.
Yeah.
We're thinking it's gonna be busy, but we've got some traffic cones and signs and Our facilities person on duty that day is ready for it, so we're
Now, I will tell you the one that's at the township, we don't unload the car, they actually come to your car and it out, so I don't know if
You
that's
just
going to happen
open
here.
your trunk
Yeah.
and they take it out.
So-
I think that's what they're doing, yeah, Emily's
Okay.
shaking her head, yes.
Okay.
And are there other, is there other programming happening at the library at that time?
On the 21st?
Just
It's a
regular,
yeah,
regular day?
just a regular day. I think there's a couple of outside groups meeting in the afternoon.
I'm excited, good.
You're excited
Yeah,
about the shredding event.
I am too, because I was out of town for the township one.
Oh,
Ah, okay.
Yeah.
well, I'm excited to,
So little excited.
I'm excited to offer this to the community and to see how it goes. And to see if it is something that we want to
Sure.
pursue for summer. So,
Okay, what was your other question?
Thank you.
Yeah.
The analytics?
Mhm. That's what is it?
Yes.
It's a firm that we use for IT consulting.
IT consulting.
So they helped us with the two-factor authentication project.
Thank you.
by the way, nice to cross that off the list of suggestions to work
Yeah.
on.
Yes, Paul and I are happy about that too.
Yeah, and let's say for the record how great Paul is in the way that
Terrific.
he
Yes.
Yeah,
really
terrific.
wonderful.
Yeah.
Very
Good.
accommodating.
So
Good,
so
good,
helpful. Okay, and Joy, if there's nothing else, there's nothing else then. Okay, Joan, did you have,
Oh, yeah.
A question
Let
on
me
the
go
water?
to that page.
was that 23?
Right, page 23. I don't know, last year's water was, November, December was 767. Maybe it's the way it's billed, but then this year, I see December jumped up to $1,200.
We had one of the driest Decembers we've had on record. We only
But
had
we
that one
were-
snowstorm.
Yeah, but were we watering? We don't water outside.
No.
Oh, you're right.
Yeah, but if you look at these numbers,
But
they're
October.
all over the place.
Yeah.
I wonder if their billing cycle is changing in some way, or they're doing something, because November and December to have, are those the exact same?
That is
Numbers?
curious, I just noticed that. I might have to go back and look at that.
Yeah, I
That
think
seems
something strange
incorrect
is,
from last year, is
Yeah.
what you're saying, yeah.
I mean, we all talked about how strange the,
Mm-hmm.
10x jump is here in October from last year to this year. But
Yeah, that was large.
Yeah, and then if you look at like May, that was $5,000 May of last year and then only $790 this year.
Right.
But look at the fiscal year usage though. I don't understand what a usage is because in 21, 22 in October was 16 and then this year it was 363.
Wow.
So where's the usage being used more? We could have still been watering in October, but
that's
I don't know. But in December it was 38 the year before and it's 58 and I don't know what fiscal year usage means.
I think it's a combination of use plus cost. I think cost has gone up.
Okay.
Yes, we
It
know
has
that,
gone up
we know that's
tremendously,
true.
yes.
I can
So
do
there's
a
that,
little,
but I agree, the numbers just don't seem to compute
I'll also mention that
with use.
I remember that the township was dealing with the water prices.
With the city of Detroit.
But our township was too, and so I wonder if they have information that they may be able to use to shed some light.
I'll do a little investigation.
I think what was said earlier about there seems to be a change in the way they're doing their billing.
Mm-hmm.
Because if you look at May and then you look at October, so May was greatly under, October was greatly over. There seems to be a change in the registering of
Yeah.
where amounts are being collected. So it might be worthwhile seeing what comes up in January before.
Yeah,
I was
You see- you-
just curious.
Yeah, no, it's a good
Yeah.
point, but they
Just
seem to have
seeing-
changed their billing cycle in some
That's what
way.
it could be.
I'll study the
Yes.
bills, Monica and I will study the bills. And we'll look and see what, if we can notice any detected, change in the usage or pricing or
But
something.
also a phone call might be worthy of that.
Didn't we discuss, we were discussing the 2-meter system
Yes.
and
We
was
do
that
have,
it?
we do have that already.
You do
Yes.
have
Yeah.
that? I couldn't remember what the,
And wells have become popular again for watering outdoors. So when we address the parking lot, we may wanna look into installing a well.
I don't
And using
know
that.
if you can
I don't know what the
have
township
a
is.
new, we have an old well.
Do you, okay,
Yeah, but it was there,
Right.
as the source of water. I don't
I know
know
they're
if you
allowing-
can drill a new one.
I don't know, we'd have to find out, yeah. But, cause for some reason, a friend of ours just built a new house in Township and she got a well.
Oh.
So I don't know if
And there
it's-
might have been a well.
That's what I'm
at-
saying. It
at the
may have
site, At the site,
It may have been
yes.
grandfathered in,
Mhm.
but they
rain
took down the
barrels?
house.
Rain barrels?
Rain barrels.
That would be hard, that would just be for like planters.
Well, I will do an investigation and report back next meeting.
Thank you. Okay, well, can I please have a motion to approve these items removed from the consent agenda?
So,
Go right
no,
ahead.
no, you go ahead, you have,
So moved.
there you go.
Second.
All in favor?
Aye.
Thank you.
Thank you.
Okay, and now we move to the other part of the agenda. Does anybody have any other to bring up?
Others?
I do. Question though about the Friends of the Library. When may I do that?
Right now.
Please.
Right now, wonderful. Then I have two things. I did go to the Friends of the Library as their my first liaison meeting. It was delightful. It was both of the last two ones I thought were long. Anyway, it was delightful to go, and before that, I'd like to say that they had their meeting and then their sale on Saturday, and I came to the sale, my first time going to the sale.
Oh, okay.
It was incredible. The library looked spectacular. There were people everywhere. Down in the sale, they were, all ages, all sizes, all, looking for everything. It was delightful to see families.
Good.
Yep, and so they reported in the meeting that they had $5,400 in sales, which was their highest December ever.
Wow, that's
And
amazing.
between
That's great.
the shop, between online sales, close to $11,000 in December.
Wow.
Incredible.
Wow.
Anyway, thank you.
That's fantastic.
Thank you for letting me go.
Yeah.
Do you want me to bring up my ambassador request? I have a former colleague, friend of mine, who has been in the library industry for a long time, expressed interest in being involved in the library, and which was really great to see. She has children your kids' age. And she also has a very strong marketing background. And I'd like to invite her to come to the ambassador meeting. So I think that would be a good idea. Her name is Laura Berg, and I think she'd be a really great addition.
It's a good idea.
I'm sorry, did you say she worked in libraries? I didn't. Yes.
And marketing.
And does still works for a content company, mostly academic content. So this is not her account, so there wouldn't be any conflict of interest.
Everyone.
Do we have rules about that?
So all it says in the guidelines is that you expressed interest or something. It's not very clear. So that was one of the things I was gonna mention at next week's meeting is a little bit more clarity on how people can get invited to the ambassadors group. And generally, I was just gonna say that you all or one of the ambassadors could invite people.
The intent of the investors group, when it was formed, was we had so many wonderful candidates for filling out the positions on this board, and we didn't want their talents to go by the wayside, because they had taken the time to fill out the application, to come to the lengthy, well, for us, the lengthy interview process, and so many of them have so many different ideas and talents to provide to the investors, but I don't think there was we weren't locking the door to anyone else who has an interest or a strong interest in either becoming more involved in the library or doing anything like that. So we just wanted to tap their talents. So and marketing is a great thing.
Yeah.
That's why, and so I don't think we have any steadfast rules.
No. So if you all are okay with it, I say, and if your person can come next Tuesday, sure.
Thank you.
Do you want me to forward the information to her?
Yes, let's talk about that.
Okay.
And how we want to. It's Tuesday at 7 also?
Mhm.
And since we're talking about the investors group and we're on other, I know that we spent 3 meetings now talking about the strategic plan, and I think that we need to definitely introduce it, but we need to now introduce a new topic of the conversation. I think that we don't want to have people get so tired of hearing the same thing. So I don't know what you have on the agenda, but particularly we have new people coming on, and we certainly have our photography exhibit, and we've been talking about possibly having a new event, maybe, but.
Yeah, I was planning to give an intellectual freedom update because that came up in a couple of meetings, and go through the strategic plan, and then I have some other ideas for ways we can use them. Talking about the building. Lyndon had the idea of maybe bringing some of our newsletters and having them review those.
Oh, that's a good idea.
And give feedback on that. So there's a couple of ideas.
Good.
Okay, great.
Thank you.
Okay, well, our next scheduled meeting is Tuesday, February 21st, and the topic will be a vending
Yeah, the
machine.
vending machine bid, yes, we'll be awarding that bid at the meeting.
And the director's evaluation will take place at that time as well.
And so that will be a closed session meeting.
That is Mardi Gras. I might wear beads.
Okay.
Did you say February 21st?
February 21st.
Yes, okay.
You got that?
I do, I just wanted to, because I would put them into my calendar each time. Okay.
Okay, well, if there is nothing else, we can adjourn our meeting at 7:38.
And I'll see if Matt's out in public.
We'll call to order the Library Retiree Health Care Benefits Trust meeting. And can I have a motion to approve the order of items?
So moved.
Second?
Thank you, all in favor?
Aye.
Great, and first we'll have a call to the public. Public? Anything from the public? No? Okay, thank you. And we'll move on to new business.
All right, can I take over?
Yes, please.
Okay. So first of all, the meetings from last year are there for your review to refresh you on what we talked about last time. For Joy and Keith, I think this is your first trust meeting, so let me give a little bit of background about what this is all about. So our OPEB trust, OPEB stands for Other Post-Employment Benefits, and it is retiree health care. So we have a retiree health care plan with staff in it. That plan has been closed since 2011. And we have a healthcare savings account for staff hired after 2011. We have always had our OPEB trust obligations fully funded in our fund balance. We have that money sitting aside in our fund balance, and it is assigned to fulfill this obligation. Many municipalities do not, and so in 2017 or 2016, Michigan passed a law which states that governments must fund their retiree obligations and healthcare obligations. And so we had to show that we had at least 40% funding for our OPEB trust. Like I said, we had the 100%, but at the time, the trustees made the decision to put that 40% in a trust. And then we have to report to the state every year that we've got this money there, and then they tell us whether we're compliant or not. So we opened the trust in 2017, we put the 40% funding in there. The next year, I think the market tanked, and so then we were underfunded. When you're underfunded, you have to go on a corrective action plan, and again, there's just more reporting that the state needs. Every other year, we get an actuarial evaluation on our trust that tells us what that OPEB obligation is, and a lot of other actuarial stuff. And then we can decide whether or not we're fully funded or 40% funded for the next year. So, according to our latest actuarial report, which was as of April 1st, 2022, the total liability was $5.5 million. So 40% of that is $2.2 million. Right now we have $2.7 million in our OPEB trust, so we are in compliance with that law. In addition, when we dipped below that 40% threshold, we had to go on a corrective action plan. We had to do a lot of reporting to the state. We did get taken off that corrective action plan as of this last fall. And you can go on the state's website, you can look up all the municipalities and find out their status, and we are listed as being compliant, so we are off our action plan. And we're in pretty good shape. Any questions about our OPEB trust?
Can I make one comment?
Yeah.
We're very proud of this, obviously, on this board, and in this community, because we, as you mentioned, it's 100% funded, but it was also, and it was a salient point when we were doing our millage. When we went to Downtown Magazine, that was really the thing that tipped over his, because he was in kind of a negative attitude, and when we mentioned that, it was just like this arm just went to the positive side, that we were so caring with our staff, because we love our staff, that we were doing this. So this was really an extremely important point when the millage came up, so that we were able to and willing to provide for our staff when they retire and when they're in the retirement, so.
And we do have a large fund balance, which might make people think, well, why do you need money? You've got this fund balance. But if you look at our fund balance, a significant portion is assigned to OPEB obligations. So we still have the remainder of our obligation in our fund balance. It's marked as assigned.
Right.
It's an important point to
It
make.
is important. Unassigned would, not be good, so.
And we have, as Matt could talk about, we have more leeway in our investments.
With this trust, yeah.
This
The
trust. Yeah.
And so with that, I'm going to turn it over to Matt, who's going to tell us about
Tara,
what's been going on.
this is actually rather embarrassing to say, but I prepared a portfolio review for your general fund, not your OPEB.
Oh,
So I feel terrible about listening to your opening remarks about the OPEB. I'm thinking, why are we talking about the OPEB? The
I'm so sorry.
the 10-page report in front of you is all about the general fund.
Oh.
But we do have just shy of $2.9 million in the OPEB trust, $2,896,000 through Friday's close of business. The
It's even better.
portfolio return so far this year has been north of 5.5%. We are about 62% stocks, 38% fixed income. This is not the material that's in front of you right now. We've got
But I'm
a
sure it's very interesting.
100% Treasury money market fund here. But what I want to offer up as an aside is by tomorrow lunchtime, you'll have a report emailed out to everybody here, giving you what I was supposed to bring with me today that I did not. It's awfully embarrassing working with you now for 14 years, and this being the first time that I've brought the wrong portfolio with me. Feel free to keep this if you'd like. I don't know how important it is to this group or others, but this is our 100% AAA rated Treasury money market portfolio that manages monthly disbursements and very short-term cash, as you know. I feel terrible that I don't have the right report with me right now, but considering I've got a pretty open schedule tomorrow morning, I could put together first thing a report that specifically focuses on the OPEB. It'll recap 2022, give you thoughts and ideas going forward in 23. It is fully invested. The investment policy statement does allow for you to take on significant amounts of equity for long-term growth, which is what we've done. We started this in January of 2019, so we're coming up on 4 years now. The net return has been positive 5.8% per year annually, even considering a very horrible 2022, the COVID of 2020. We've managed to make systematic rebalances along the way. I'm giving you kind of the high points now. You'll catch all that tomorrow. But as I said, I could talk about the OPEB, but it's not specific to what I brought with me. So I feel terrible about that. If it's okay, can I use Monica or even you, Tara, as the point person to distribute out that PDF tomorrow? I work fast. I get to work early. I'll have something to you, I swear, in the morning. I feel terrible that I don't have it with me right now.
Matt, why don't you, if you could, because we do have such restrictions on this account compared to the OPEB account, could you just describe the differences?
Sure.
And then maybe that would be helpful as well when you read the report.
Good question.
Well, let's start with what's called corporate cash, or let's call it the operating cash. That's the material that's in front of you right now. By way of what Michigan calls Public Act 20, you need to invest in CDs, money markets, or AAA rated government securities with that particular investment. No equities are allowed, obviously. Nothing with a duration longer than 5 years, and no junk bonds, obviously. Everything needs to be of high credit quality. We've been in a very low interest rate environment for a number of years. In the last, say, 6 to 9 months, rates have climbed to the point now where we've almost locked in a guaranteed 3.5% to 4.5% rate of return for this year, because we built out our whole treasury ladder of 23. We've reinforced that ladder with new money, and we even have $2 million sitting in a money market fund that's yielding 4.15%. There's no market risk. Interest rates will move up and down. That might impact your bond prices or your treasury notes in the very near term, but with rates stabilizing now, I feel very confident about the general fund posting a return we haven't seen probably in 5 years.
Okay.
Balance that out with the OPEB, which is considered a retirement vehicle. Retirement vehicles are meant to match an actuarial report or an assumed rate of return. That assumed rate of return is built for long-term growth because you're funding liabilities for future retirees. In this case, the OPEB is a health and benefit retiree program where, based upon your investment policy statement that is crafted, put together, we work closely with your attorneys to put that together 4 years ago, it allows for certain ranges, minimum, maximum, and target allocations to certain areas of stocks. Now, it would be rather foolish to go 100% stocks because the market volatility would move in such a way that might impact how much funding you need to put into that post-retirement benefit in a given year. So the idea, your traditional 60-40, 65-35, 70-30 equities to fixed income split is what we're achieving here. The way in which we do that is by owning US stocks mostly, a little bit of international stocks, balance it out between growth and value, large and small, and on the fixed income side, it's 100% investment grade bonds. So the idea there is to use equity as your long-term growth, bonds to hopefully during most years balance out some volatility to the downside. That didn't help us in 2022 because it was the worst bond market anyone's ever seen in their lifetime, coupled with a stock market that had the worst 6-month beginning to a year that we've seen since the 1930s. You'll catch all this in my report tomorrow, but the point being is over the longer term, 10, 15, 20 years after everyone at this table has been replaced by somebody else that's overseeing those funds, decisions you make right now are going to impact the 10, 20, 30, 40-year return of this investment. So when those people retire, hopefully we've grown at a rate of 6 or 6.5 or 7% over the long term. You're not going to do that entirely within bonds. You need those stocks to give you that upside long term. So when we kicked off this venture in 2019, we had 3 consecutive years of double-digit growth in the stock market, 19, 20, and 21, even with a really horrible 2020 by way of COVID. When the market crashed 38%, we were still up double digits for 2020. What happened in that 4th year, 2022? We went down. We lost approximately 15%. Why? The bond market was down 13, the S&P 500 was down 18.1. So our balanced portfolio, where the S&P is down 15 or 20, you'd like to think bonds are up 5. Didn't happen. Interest rates spiked last year, so our fixed income bond prices got compressed, and any income we earned wasn't enough to offset the bond price compression. So we had a bad 2022. But I've told you guys for years, going way back to the 1930s, if you look at 80, 90, 100 years of market returns, you typically make money in the market, S&P 500, Russell 1000, you name it, 76% of the time, or 3 out of 4 years. This is just a textbook version of making money in 19, 20, and 21, and then that 4th year, down. The down year is great when it's only 2018, and in 2018 we lost 4.5% in the S&P. It happened to be a really big down year where the S&P at one point was down 25%. It did battle back a little bit in December and it finished down 18% for the year. But the point being is this is meant to be a long-term vehicle. We can look at things on a monthly statement or a quarterly report or once or twice per year in person. But what you really need to look at is why do we allocate to stocks? Well, for long-term growth. Why do we allocate to bonds? To hopefully cushion some of those negative volatility type years like we had in 2022, 2018, 2008. Those years happen, they pop up. We just happened to have a really big down year for the first time since 2008. And that's why we lost 15% last year, is because of that very reason. Now, here we are in 2023. Hopefully, we're starting a new 4-year cycle and we have a nice positive return. The market hasn't been down in consecutive years since 2001, 2002. So we're going back 20 plus years. Typically, if you have a down year, it rights the ship the next year with regard to volatility. Inflation's starting to come down a little bit. Interest rates seem to be stabilizing. Hopefully, earnings reports are strong. But then again, we're getting much more into the micro here. But the Fed's trying to almost force a recession by way of driving up unemployment. You see massive corporations out there like Amazon and others that are letting go of workforce because it's getting a lot more expensive to do business. We'll see where that leads. We might have already had that impact felt negatively on the S&P 500 last year. Just because we go into a recession potentially in 23 doesn't exactly mean we're going to have a negative year in the stock market. So to answer a very simple question, one portfolio is very, very conservative. AAA rated, treasuries, money markets, CDs, stuff that's protected. You put $1 into the market, you're getting your dollar back plus interest. The OPEB is meant to be long-term growth with the luxury of owning stocks for that growth. We just had a really nice entry point. We got in right after 2018 was a bit of a stinker year. 19, 20, and 21 took off. So we had a nice running head start into the OPEB. It's up over $550,000 since we started, with that initial seed money in 19. We did give a little bit back last year. It wasn't a great year, but then again, like I said, this is meant to be a long-term venture, a 401k, a 403b, a pension, those types of investments. I'm much more focused on the general fund week to week, month to month. That's why when you open this up and you take a look at it, there was an awful lot of trading, buying and selling and repivoting of the portfolio to take advantage of this rise in interest rates. There were 3 different episodes during 2022, March, July, September, and then finally a fourth one, I guess, in December, where I continued to keep deploying money into better yielding treasuries. There is a monthly report that goes out with a statement to Monica and to Tara. On a quarterly basis, we get a little bit more intricate in terms of what we report, but there's constant communication with the team here, letting them know what we're doing. So every quarter, there's a quick update every 90 days. I'm giving some Cliff Notes versions of like bullet points of what's happening with regard to those treasury notes and what we're buying and what the yield is. Right now, with money that was just deployed by new tax dollars that came in, there's been approximately $2.4 million that have come in so far. We'll have more coming in, but they've been deployed into September, October, and November 2023 treasury notes yielding 4.6%. So hadn't seen yields in like this forever. I'm balancing out because I like the money market getting 4.15 liquid anytime, but I sure like locking in income and ladders that are going to mature later in 23 and into 24 that are going to get us 4.5 and 4.6. So it's a great position to be in because we typically haven't had this opportunity for the last 3 years. Through the maturity schedule that just happened in 22, all of that ladder is wiped out. We've replenished the 23 ladder. This last year, it was 25, 30, 40, 50 basis points. Now we're looking at between 1.5 and 3.5 for this year and 4s later on this year and into next. So that's kind of the basic details between the OPEB and the general fund. Completely different strategies and completely different, I'd say, lawful ways in which we can invest in one, and a much more blank open canvas in terms of the OPEB on the other side.
Thank you.
Yeah, thank you.
That's great.
Once again, I'm sorry I don't have the right material.
It's okay, Matt, you did a great job.
Yeah, that was
summarizing
a great,
OPEB.
that was,
Okay.
yeah.
It's perfect, yeah.
So I will send over a PDF with deeper dive analysis in terms of the portfolio and stuff specifically focused on the OPEB. Feel free to keep this if you'd like. I did bring, there's a lot of information on income and yields and all that stuff, so.
I'm glad that you gave that explanation of our general fund investing strategy and the trust, because they are very different, and that was a great education. And the trustees in their packet, they do have a list of the balances each month in the OPEB, so that you can see, well, it's a $500,000 loss right now, but we're still fully funded, so.
Right, I think we started around 3.2, 3.3.
Yep.
Gave back about $500,000.
Yep.
There's that 15% pullback I was talking about.
Yep.
We're creeping over 2.9 now for the first couple weeks in January.
Okay.
So we got a ways to go, But then again, it's a marathon, not a sprint, and we'll get there. But you'll see that in the information I provide tomorrow.
That's great, that's great. Cause the one trustee who couldn't be here tonight, Shane, had asked about the typical profile of a trust portfolio like this. So it'll be good for you to share that with everybody and then he can see that too.
Perfect.
Great.
Sounds good.
Okay,
Thank you.
well, any
Thank
questions
you.
for Matt? Or any questions?
No.
Okay.
You rattled those off really,
Yeah.
Yeah.
Thank you,
so
Matt.
you knew what you're talking about, even though you didn't bring it in.
Yeah, pay attention.
We'll just
I-
tease you
yeah.
occasionally.
Thanks.
Yeah. All right, well, there's no motion for this meeting. This is an update for you all, because you are trustees of this trust, so it's just to let you know what's going on with it.
And we're supposed to have this once a year, just so you know.
Yes.
Yeah,
Yes.
so
Yes.
you'll see this next year as well.
Yes.
Yeah, in fact, there's already a,
Meeting on the books.
the next scheduled regular library
Oh, tell us,
retiree
Danny, tell
healthcare
us.
benefits trust meeting, put it on your calendars, will be held Tuesday, January 16th, 2024.
And it'll be here like that.
I'm sure that is the
Will.
truth.
I know.
That is the truth. Well, if there's nothing else, then we can go ahead and adjourn this meeting.
Just a quick
Oh.
question. Why was there the finance, there was also a document sent out for the finance committee that just seemed to be the general financial statement.
So you are you on the finance committee?
He's on the
finance
Yeah, so the finance committee always gets a little extra package of
Oh,
Because you're
okay.
special.
a little,
It
it's
was
just some
just-
more detailed
I see.
information about our budget.
I get it.
But you
Yeah.
will be tested
I will be
before you
tested.
leave tonight.
You won't know when.
That's right.
Okay, I got it. Thank you.
Yep,
That's right.
all right,
Okay, well then now we will adjourn at 7:59.
great.
Thank you
Thank
very
you,
much.
everybody.
Thank you, everybody.
Thank you.